Okay, hi and welcome everyone. Hope folks are having a good start to the week. We're glad to have you here for our webinar about best practices and watchouts related to federal grants and audit requirements. My name is Emery Cowan. I work for the Fire Adaptive Communities Learning Network and the Watershed Research and Training Center, and here with Jen Keller and Troy Rector of Clark Newber, our audit experts and presenters here today. Glad to have them here as well. This is the first session in our two-part series, and I'm going to let Jen and Troy take it away in just a minute, but wanted to go through some quick Zoom reminders for everyone. We will be using the chat box for a couple of interactive activities that we have planned for today. We'll also have a little bit of time at the end for some Q&A, so please put your questions in the Q&A box so that we can keep track of those. And anything that we don't get to in Q&A, we'll be able to pull into our dedicated Q&A that Jen will discuss in just a few minutes. And lastly, we are recording this webinar and we'll share it out to all attendees or all registrants, as well as have it on our YouTube and webpage, so you can take a look back if you have to hop early or if you want to share it with someone who wasn't able to attend. We can go to the next slide. We have a lot of people who signed up for this webinar who have signed up for some of our previous trainings, so I'll breeze through our organizational intros, but in general, just want to say that the Watershed Center and the Fire Adaptive Communities Learning Network do a lot of work around community capacity building and community wildfire adaptation. So if that's a topic of interest, check out our organizations on our websites, and my colleague Emily is pasting those links in the chat box. We can go to the next slide. Funding for this training series comes from the Forest Service through its Community Navigator initiative, and we've produced a number of other helpful resources and trainings through our involvement in that effort. One or two that I just want to highlight are a primer about navigating match and kind of meeting and tracking match, along with a template that we have developed for folks to use and adapt, and a couple of training series, including one about Forest Service grants and agreements. So those are all available on both of these websites in the slide. The URLs are a little hard to read, but we'll share those out in a follow-up email, and then those QR codes will take you to those websites as well, where all of those resources are housed. I do want to know before handing it over to Jen and Troy that we have again several folks who have tuned into a series that we're just wrapping up on Thursday. It's about federal grants management more broadly. And this training is supposed to be hopefully really complementary to that four-part series that we've been putting on, with the idea being that this will really kind of re-emphasize and overlap with some of the core concepts around federal grants management, but really take that deeper dive into takeaways and implications for from an audit standpoint. So hopefully time well spent on both trainings. And if you would like to check out those grants management trainings, we have recordings of sessions 1 through 3 on our website and on our YouTube page. And again, Emily's plugging those links into the chat box. So one just kind of final disclaimer is that we do not speak for or represent any federal agency. We're just sharing kind of best practices, information, and kind of baseline information around grants management and, again, audit implications and best practices. So please take this information and then double check with your federal award and program manager for specifics on your situation. So with that, I will hand it over to Jen, who's going to take it away. Thanks, Jen.
Thank you, Emery. Welcome, everyone. We're excited to be here today. A little bit about who Clark Newber is, and then we'll introduce ourselves. So Clark Newber is an accounting, consulting, tax, and audit firm in Bellevue, Washington. We have about 300 employees. We've been in existence for over 70 years. one of the top 100 accounting firms in the nation. And there's a list of our services here, but we serve not-for-profit, public sector, privately held and family-owned businesses, and high net worth individuals. So we have a lot to get through today, so we're not going to focus too much on ourselves, but I'm here with Troy, and his background is here, and my name is Jen Keller. Troy is a shareholder in our our audit and assurance practice, focusing on not-for-profits. He's the single audit guru today, and my name is Jen Keller, and I work in our accounting and consulting services department, and I specialize in federal grants management.
Hello, everybody.
So today we focus on grant compliance and audit requirements, best practices and watchouts. It's two parts where we're dividing up the talking points between today and February 27th, and then we have a special part 3 for Q&A. So if you're interested in asking a question, or if you ask a question that we don't get to today, please consider attending, and we'd be happy to address it then. Before we get into the learning objectives, we just kind of wanted to pause and say that there's a lot going on right now, a lot of uncertainty and a lot of confusion about what federal grants are going to look like going forward. So we want to take a minute to talk about what you could be doing right now to safeguard your organization, get yourself and your programs in order, so that should something change, or should you have to respond to a federal agency quickly, you're in the best possible position to be able to do that. And so what are some things that you could be doing as an organization? So absolutely stay informed, read the news, watch webinars, visit your federal agencies' websites if they're still up, because some of them have been taken down or frozen. Check the whitehouse.gov for additional executive orders. So really just keep informed and make sure your key stakeholders are also informed. And this could be the board, staff, any individual that you feel you identify as needing to be up to date, that you're keeping them up to date as well. And then stay compliant. So we're going to, now more than ever, I think this webinar is perfectly timed to help you with this, but now more than ever, it's important to stay compliant. So you're going to want to make sure you're hitting those deadlines for all reporting requirements. Presuming you're not on a stop work order notice, you're going to want to make sure that you have those reports in, that your drawdowns are up to date and timely, and we'll talk about that a little bit more in a second. You're going to want to make sure that all your policies and procedures are up to date. I was on a webinar recently where they really highlighted the importance of reviewing the record retention policy, especially with staff, with your IT department, to make sure that all of that documentation is centrally located, available, and appropriately stored. So that's definitely one of those things to attach to reviewing your policies and procedures and making sure everyone's compliant. Review your current DEI programming for adherence to the executive order, and also the DEI certification that is coming out, where not only you, but any subawardees you might have going to have to certify that that federal funds were not used in any DEI initiatives. And then review your current portfolio. So really check your federal program goals and objectives for non-compliance with executive orders. We've heard of, larger organizations going line by line through their funding with their legal counsel to ensure that they've identified what could be affected should these executive orders go through. And then read the terms and conditions for termination language. You're going to want to know how and when the government has the right to potentially terminate your awards, and begin scenario planning. I mean, it's easy to say look for additional funding, but of course that's not as said than done. So, but begin scenario planning in anticipation of short or long-term reductions or delays in federal funding and related grant payments. What's that going to look like if you need to do a drawdown, but the USDA or the Forest Service, whoever your funder might be, isn't actually responding to those drawdowns, and what's that cash reserve going to look like? Troy, would you have any additional?
Well, that's a great list. The only other thing that I'd like to add to that is, in terms of clients that we've had receive stop work order notices or suspension notices, they're all written differently. But each entity is really focused on responding to those, making sure they're adhering to those stop work order notices, suspension notices, and the communication with the grants officers, identifying kind of what your entity's understanding is in terms of what you're supposed to stop. When they're asking you to cancel all obligations, there are certain obligations where you can't cancel, and so identifying those costs that you just cannot cancel even if you suspend work. And so there's kind of that communication piece. And again, if you haven't received a notice yet, that's great, but just being prepared for if that does happen, because what we have identified is when that notice is received, it's usually a couple of days that you have to respond. So not a long time. So just preparing yourself now.
Perfect. And now that that's out of the way, we're going to continue on with the regularly scheduled program. So the learning objectives for today are outlining the regulations that apply to federal grants management, defining the uniform guidance and its importance, a real introduction to single audits and how it relates, standards for financial and program management, and then we're going to begin to review subchapter D provisions and common watchouts. And that part will continue into the next training that we have coming up. And of course, it wouldn't be federal grants management, it wouldn't be the government without a whole host of acronyms. So we try as we go through to really call these out and say the full name, but if at any time we miss one or you need to go back, here is a list of the most common acronyms that we will say today. So feel free to reference back to this slide because it is a little bit of acronym soup in federal grants management. So let's start with outlining the regulations that apply to federal grants management. And we will begin with me working on this slide. What is a grant? So federal grant involves the transfer of anything of value from the federal government to a non-federal entity to carry out a public purpose authorized by U.S. law. And that U.S. law there, that point is really important. So Congress, they decide that a program is necessary, it's put into law, and then these grants help carry out that public purpose. It's taxpayer dollars that are going into these programs. So there are a lot of rules and regulations that go into safeguarding the taxpayer dollars and to ensure that they're spent in compliance with the requirements that are outlined in the award and in the regulations. Typically, government grants do not require repayment. Government grants are typically awarded based on certain criteria, such as applicants' eligibility, project proposals, or the alignment of the project with the government's objectives or priorities. And these grants can support a wide range of activities, including research, education, community development, healthcare, and environmental initiatives. A grant is separate from a contract in that a contract is a legally binding agreement between two or more parties that outlines the obligations and rights involved, and it's typically used to obtain property, goods, and services. So the government usually gives out, usually enters into arrangements with organizations, either a grant, contract, or a cooperative agreement. And so it's important to distinguish what is a grant and what is a contract, because they have different requirements behind them. And then cooperative agreements is very similar to a grant, but it involves more of an involvement, a partnership between the federal government and the not-for-profit or entity receiving the funding. So there may be performance obligations where the federal government and the grantee are working together to achieve the mission. And there's a lot more buy-in from the federal government within these cooperative agreements. So we'll go to our first question, and that question is, what kind of federal funds are you currently receiving? Are you receiving grants? Are you receiving contracts? Are you receiving federal subawards only? Or are you kind of getting a mixture of all of the above? And this just helps us as we go through connect with you on different points and try and highlight based on where you are and what kind of funding you are receiving. So if you want to put your responses in the chat box, that'd be great. And then we'll keep going. So all of the above was one answer. So you're very busy there. 1 and 3 mostly. Thank you. Give maybe just a couple more seconds to keep going. All right. Well, if you want to add a little bit more as we go along, feel free to put that in the chat. As a reminder, chat, you can put your answers to these questions, and then if you have a question related to the presentation itself, we're monitoring the Q&A, so feel free to put those in there. So where do these rules come from? So we talked about what a grant is. So the U.S. Constitution is, of course, at the top of this pyramid. And then we have statutes for federal grant and cooperative agreements, the Authorizing Act, the Appropriations Act, which funds the grants and cooperative agreements and sets the budget for the year and what money is going to go to get different funding opportunities. Then we go down and we have regulations. So statutes are more powerful than the regulations, and the regulations are more powerful than the guidance. And these regulations is where within these regulations is where we will find 2 CFR Part 200, also known as the Uniform Guidance. So as we go through, we're going to talk a lot about the Uniform Guidance, and please know that that is the 2 Code of Federal Regulations Part 200. And then those universally apply to all grant awardees. Those are the universal requirements, but underneath of those we have guidance, and guidance comes from each individual federal agency. It may be their way of interpreting the uniform guidance in a gray area. It may be an add-on. It definitely would not conflict with the uniform guidance, but it adds additional important requirements that you need to be aware of and you need to follow in order to be compliant all around. So I will pass this off to Troy now.
All right, thanks, Jen. So where did the rules come from? For some, you look at this slide, you're like, okay, I'm overwhelmed already. But there have been updates, and we're going to talk about the uniform guidance revisions are really, focused by the OMB to make these regulations easy to understand. And so everything that we're going to be covering, in our 2 sessions, and as well as the Q&A, in some form or another, is included in the Code of Federal Regulations. And so 2 CFR is the specific part of the Code of Federal Regulations, is kind of the grant area of the CFR. And we cover a number of these areas in one form or another. But what we're going to be focusing on for purposes of our training and really the key focus for the single audit is 2 CFR Part 200. So the uniform administrative requirements, cost principles, and audit requirements for federal awards. Probably could bore you with a history lesson, but 2 CFR 200 came about a little over 10 years ago, and it really consolidated prior circulars. So you might have heard A133 or A122, A110. So that's what 2 CFR 200 replaced. So that's what we have now. Okay, so whom does it apply? It applies to state and local governments, institutions of higher education, nonprofits, whether, as well as commercial entities, whether it's a direct award or a subaward where the entity is receiving the funding as a subrecipient. And so even as a subrecipient, these requirements that we're talking about flow down to you in some form or another. The only caveat is um, for commercial entities and foreign entities, they are exempt from subpart F, so the single audit part of the uniform guidance ish. And the reason I say ish is there are some federal agencies when they adopt 2 CFR 200, they may apply subpart F to commercial entities. And then in addition, and what we've seen certainly over the last year or two, more and more, agencies are incorporating in the terms and conditions of the award a single audit requirement, even for commercial entities. And so that's actually something that the audit community has been kind of trying to navigate. Of course, in years past, HHS had a commercial single audit requirement. Department of Energy did, but we're seeing more and more entities require that, and so that's kind of a developing item. For hospitals, hospitals actually have their own set of cost principles. In the newly adopted 2 CFR Part 300, which is a new part of the CFR for HHS. So one of the things to remember as a reminder when you're going through and you're reviewing the uniform guidance, a must is a must and a should is more of a best practice. So something to keep in mind. And here it is. So if you were to click on to CFR Part 200, you would see the different sections here. Ken, as Jen had mentioned, acronyms and definitions. And in some cases, the definitions are the key regulation or the key requirement that exists. So if you're looking at modified total direct costs and you're like, okay, well, what is that? The definitions is where that is. The subpart C is more like a pre-awards. That's more on the federal agency side. But as a grantee, you're going to be spending most of your time in subpart D and subchapter E. And so subchapter E are for the allowable cost provisions. As you all know, most grants are cost reimbursement based, and so so important that they have their own chapter. And then everything else is in subchapter D. Subchapter F is where the single audit requirements live and exist. And so, including what is the schedule of expenditure of federal awards, what is the auditee's responsibility, and then ultimately, what are the auditor's responsibilities? So as an auditor, we follow the requirements of subchapter F. And then there are some appendices, contract provisions, indirect costs. So when it comes to the recovery of indirect costs, and I think we get to that in part 2, right, Jen, in terms of our presentation. There are different appendices if you're a nonprofit or a state and local government that gets into a little more of the nitty gritty related to indirect cost recovery. Okay. So I mentioned the revised uniform guidance back in May of 2024, April to be exact. Revisions were made to the uniform guidance, and mostly actually good. In those revisions, what they're really focused on doing is reducing agency recipient burden, rewriting sections of the uniform guidance. There were some areas where they're actually allowing, for example, closeout costs to be charged when they weren't allowable before, increasing the de minimis rate from 10% to 15%. And so just a number of areas that really are benefits to the grantees, and really recognizing, the OMB went through the process of listening to grantees and identifying where are your struggles related to federal grants, and really working to improve the regulation. So the next slide gives a little more detail in terms of understanding the resources. We actually have taken an hour and a half before to talk through these requirements. A couple of the documents that are really useful in terms of just starting out. The 2024 revisions overview was published by COFA, an arm of OMB. It kind of really gives a highlight of what the changes are. The two CFR revisions, the red line version is really helpful in terms of understanding the old versus the new. And so again, a couple of resources there to understand the revisions.
And all of these all this underlined text here are links, and we'll be sharing this with you. So you'll be able to come to the slide and click on them, and they will take you to the respective reference.
Yep. All right. So one of the things that's a little complicated, so granted, most of it was good. The thing that's a little complicated was, the question, when is this effective? And so we have, there are a couple of documents that were issued by COFA that talks through the effective dates of these changes, in that we've tried to highlight in a couple of slides here, a couple of further slides. And so the takeaway is, first, for subpart F. So when we talk about the increase of the single audit threshold, which we're going to talk about, that is based on your entity's fiscal year. And so for fiscal years beginning on or after October 1st of 2024, the single audit side of these changes would be effective based on your fiscal year. Everything else, so the de minimis rate, the closeout costs, these other changes, are effective on an award by award basis. And so we kind of cover here that for any new federal awards issued on or after October 1st of 2024, they're presumed to apply the 2024 revisions. If you have a federal award that existed prior to October 1st of 2024, you may have an amendment after that date, but in order for the revisions to be effective, to be determined effective, that amendment has to explicitly apply in reference to the 2024 revisions. And so what that really means is, for the next couple of years, you're going to have some awards that are subject to the existing uniform guidance, and some awards that are subject to the revised uniform guidance. So a little complicated, made a little complicated on us. And probably just as equally complicated, if we look at the next slide, is related to subawards. And so, the effective date of the revisions are really based on whether the revisions are effective on the prime award. So like if your entity received a subaward from a state, then flowed it down to you, even if that state issues you a subaward today, it doesn't necessarily mean that those revisions are effective, because they would depend on whether the state's award that they are flowing funds to you have those revisions as being effective. So it just means that you'll want to track in your grants management system, track which version of the uniform guidance applies, the existing or the revised. And it's because in the single audit, when we get to testing these awards, the OMB is working on revisions to the compliance supplement that we follow when we do our audit. And it's going to have one audit plan for awards subject to the existing uniform guidance, and another audit plan for awards subject to the revised uniform guidance. And so the auditors will want to know, for that particular grant or contract they're testing, which requirements apply, because they will need to know, which tests, which requirements they need to test. So the last item we have here is in terms of navigating the uniform guidance. If you were to just go online, do CFR 200, what would show up would be the revised uniform guidance. So if you actually want to know, okay, well, I have a grant that still applies the old requirements. Well, how do I actually pull up the old requirements? So what you would do is if you go to 2 CFR 200, you would click on the go to date on the bottom left-hand column there, page, and you would enter in, let's say, September 30, 2024, or a date prior to October 1st of 2024. And that will then bring up the revised uniform guidance. So again, so the requirements that we're going to be going through in these sessions really kind of focused on the new requirements, but wanted to kind of give you a snapshot of these revisions. And again, hopefully you'll find the resources that we had on the prior tab helpful in kind of navigating what these revisions are.
All right. So here we have a list of revisions that came about in this last review of the uniform guidance. And we would love to hear your feedback on what you're more interested in hearing about. So we have the de minimis rate increase from 10 to 15%, the change in modified total direct costs to include subaward thresholds, increasing that from 25 to 50,000. The change in the equipment definition, increasing that from 5 to 10, mandatory disclosure amendment to reference credible evidence, closeout costs now being allowable, the single audit threshold increase to 1 million, or all of the above. And again, this will just help us tailor our conversation as we go along. So if you want to put your answers in the chat, we would greatly appreciate it. So we have 4 and 6. So we'll definitely talk about 6 in detail, and 4 we'll put that in there. All of the above, 3 and 4. Perfect. 3 and 7. 2 and 5. All right. So we'll get to all of that. Thank you all for answering that question, and we will try and make sure we get to all of that. Okay. Troy, you're still up.
All right, great. So introduction to the single audit and how it relates. So as we're kind of we're going to go through kind of a primer for the single audit. In session, in part 2, we get into even more detail, including what happens if you have a finding, kind of what's the workout plan there. But had to start somewhere, and thought that the starting point would be, well, who actually needs a single audit? So non-federal entities that expend over $750,000 of federal awards in a fiscal year are required to have a single audit. And so a couple of key items there is expend. So not award, but actually expend. And we're going to go through that in a couple of slides, a little more detail in a fiscal year. So this is not based on the federal fiscal year or the grant period. This is based on your entity's fiscal year. So think about the year that you have your financial statement audit performed over, or that you file your Form 990 over. That's your year. And does it include, really great question, George, does expend include advances? The short answer is no, but we'll get to that in a couple of slides. So as we mentioned or alluded to before, that threshold has increased to $1 million. And so again, but that's based on your fiscal year. So that's really starting with a September 30, 2025 fiscal years, like 12/31 2025, June 30, 2026 is when that threshold would increase to $1 million. We talk about, in terms of the single audits, if all of your funds are expended under one assistance listing number or one program, and it's not research and development, you may be eligible for a program-specific audit. And really what that is that's a single audit without a financial statement audit. So when we talk about single audit here, the presumption is that it also includes a financial statement audit. Certainly during the period when COVID funding was received, there were certain entities that were getting federal funds that had never even had a financial statement audit before, which is a heavy lift within of itself. And so, so that's where a program-specific audit, would be beneficial, in that you would just have the compliance audit, but not the financial statement audit. But I know a number of nonprofits are required to have a financial statement audit because of charitable solicitation requirements in their state. So they may already be having that done. And then both must be conducted annually. So this would be on an annual basis. So the very few instances where you can maybe have a single audit cover a couple year period. I saw the question come up in terms of what is a single audit, and so, the Single Audit Act that was passed, I believe, back in the mid 90s, the reason why it was passed is, a lot of entities, and this still kind of exists now, federal agencies were coming out and requiring audits, performing audits on a program by program perspective. What the purpose of the single audit is to do an entity-wide audit of your federal grants and contracts. And so I know federal agencies still go out and do monitoring visits. Inspector generals do. Pass-through entities were required to monitor. But the single audit was really, the purpose of it was to have one audit that federal agencies can rely on. So just as the name would suggest, a single audit. Okay, if we go on the next slide. Okay, so the single audit objective, what is the objective of the audit? So if you think about a financial statement audit, which probably a lot of you have performed, okay, the auditor is auditing to determine if your financial statements are fairly presented. So they're providing an opinion. They review internal controls, but they don't provide an opinion on internal controls. But their purpose is to provide an opinion. Well, in a single audit, we're doing the same thing. We're providing an opinion on those programs that we select for testing that you materially complied with the laws and regulations that apply to those programs. So it's even though the single audit is performed typically around the same time, certainly issued around the same time as a financial statement audit, it really is a separate audit in terms of the testing that we do and the understanding of controls that we obtain. Because again, our focus is to provide an opinion on whether you complied with the grants and contracts that we selected for testing. Okay, so this kind of shows what the single audit process is. Starts with determining federal award expenditures. So what are the federal awards that your entity had received? And what are the amounts that you're going to report as expenditures? Selecting the auditors, the one, a couple of, I guess a comment there is, not every CPA firm or audit firm works with nonprofits. That's kind of the threshold. And then not every firm that works with nonprofits actually performs single audits, kind of higher risk audits. So sometimes that selection of auditors can actually be a process of and of itself. Prepare the schedule of expenditures of federal awards. So again, just the financial statement of the single audit that lists your federally funded awards. The major program determination is the process that the auditors goes through in determining which of your federally funded grants or contracts for the year are going to be tested. It's based on the size of the grant, risk process. So it's an involved process, but the takeaway here is we typically don't audit every federal grant or contract that you expended funds under. So it's a process of going through risk-based, size of the award, which program are we going to test and issue our opinion on. So then we go through, we audit those major programs and ultimately issue our audit reports. Okay, so what is a federal award? So a federal award, I'm going to get to my slide here. Okay, so federal award is a federally funded grant, federally funded award or subaward that you've received as a subrecipient. It can also include cost reimbursement contracts under the federal acquisition regulation. So if you have a contract that's subject to the federal acquisition regulations, the only contract under the federal acquisition regulations that is not in the scope of the single audit would be firm fixed price contracts. Everything else is included. Compacts with Indian tribes, cooperative agreements, direct appropriations, loan or loan guarantee. So if you have a federally funded loan or loan guarantee, that is included within the scope of the single audit, and we'll look at a slide in terms of determining what amount is reported on the CFA, and then we have some other items there: interest subsidy, free rent, non-cash assistance. So kind of the common one that I see is food commodities being reported. So there are instances where all those things should be reported as federal assistance on the CFA if they are federally funded. Okay, so what federal funds are not included in the single audit? So Medicare, Medicaid payments to non-federal entities for patient care to individuals is noted in the uniform guidance as being explicitly excluded. And then we come to receiving funds as a contractor or a beneficiary or a subrecipient. So it sounds like Emery was mentioning this was covered on a prior session in terms of what's a subrecipient versus what's a contractor. And we actually covered that a little bit more in part 2. But if you're receiving funds as a subrecipient, then that grant or contract could be a contract. But you're identified as a subrecipient that is subject to the single audit, but not as a contractor. And so we have a couple of notes here, but we're going to cover that a little bit more in part 2. But one of the takeaway here is that very last sentence: the substance of the relationship is more important than the form of the agreement. So we often see instances where it's actually like the agreement is a contract, and the entity may even be like generally referenced as a contractor throughout the agreement, but then there's a provision saying, oh yeah, this is federal funds, and for purposes of the uniform guidance, you're considered a subrecipient. And so for those subawards, you really do have to kind of read through it. Does it include federal funds? Are you a subrecipient or a contractor? And sometimes it actually requires you to follow up with the pass-through entity to get that determination, to get clarification on that. So, so more to come in part 2 of our training on that one. Okay, so when are funds expended? And I'm going to get back to George's question here. So advances. And so entities, they may have the ability to draw advance funds down. So off of a federal payment portal, there are certain programs where the federal agency may actually advance you the full amount of the funds when the award is entered into. And so the takeaway here is when funds are expended, when they're reported on the CFA, or when the expense transaction occurs. So not when you receive the funds, but it's when you expend those funds, when you claim that cost when you're claiming that cost. So if you think about it from an accrual standpoint, it would be, when that obligation is incurred, when the payroll is effective for. So when it's when the expense transaction is incurred. If you're dispersing funds to subrecipients, what gets reported on your CFA is when those funds are dispersed to the subrecipient, not when the underlying subrecipient expense was incurred. And kind of the concept there is it's not an expense. So if I received a bill today from the subrecipient, and let's say it covered the last quarter of 2024 expenses, that is not an expense to my program until I've actually reviewed, approved that payment to the subrecipient and dispersed the funds to the subrecipient. And so that's an important thing to note if you're passing funds through to subrecipients. I know Sunny had a question. So subrecipient contract determinations affect how you are audited. Correct. And so if you are considered a subrecipient, those funds are in the scope of the single audit. If you determine, or it's identified in the award, clarified by the pass-through entity, that you are considered a contractor for purposes of the uniform guidance, then that contract does not go on to the CIFA. And so, again, very important in terms of determining what's in or out of the scope of the single audit. And I've had instances where, it came down to the question of, is the entity even required to have a single audit? And again, the subawards, subcontracts are not always written all that well. So we do sometimes, as a part of that determination, require follow-up with the funder.
And I've also experienced this where a state gave money to an entity and came and did a desk review one year. And this entire time, the entity thought they were a contractor. And then they came to do a second desk review the next year. And they said, "Where's your single audit?" And they said, "Well, we didn't have a single audit. We're a contractor." And that's when they brought us in. And I pointed out that the language in the agreement that they received was such that it would have caused me to ask for further clarification, because it did look like it was a subaward in substance, but it was missing the required language. And so they were required to go get a single audit. So it is really important to understand what you're dealing with, because that has serious implications for the single audit and your requirements.
Yeah, and it was probably was covered in session 3. If you're a subrecipient or a contractor, ultimately it's like what requirements do you have to follow, right? If you're considered a contractor, you're just like a vendor, right? And very few provisions of the uniform guidance would apply to you, versus a subrecipient, the full meal deal is going to apply to you. Any new loans, and so federally funded new loans, where the proceeds are received or expended during the year, would go into the CIFA, as well as outstanding loans. So if you have a federally funded outstanding loan that has continuing compliance requirements, so think about like a loan for supportive housing, where you receive the funds, you do the housing project, and then now, for the next 30 years, you're required to ensure that eligible participants or eligible residents are in that project. The beginning balance of that loan, as well as any advances during the year, would be required to be reported onto your CIFA. And so federally funded loans do stay on the CIFA for quite some time if they have the continuing compliance requirements. And then we have some other items here in terms of food commodities, insurance. Thing of the food commodities to note here is it's the distribution or the consumption of the food commodity. So if you have some in inventory at year end, that wouldn't go into the CIFA, but it would just be items dispersed.
And we have one more question, Troy. So if your organization awards to subrecipients, is your organization or the subrecipient responsible for the award amount in terms of an audit?
Yeah, and so
Great question.
Yeah, and so the answer there is yes and yes. And so so if you're a pass-through entity and you're passing funds through to a subrecipient, that subrecipient expense or the disbursement of subrecipient funds is included in your CIFA. And so in the single audit, the auditor is going to audit your monitoring of the subrecipient. They're going to be auditing the subrecipient monitoring, which we cover in part 2. And then the subrecipient, so the subrecipient, if they, received those funds, expended those funds, they also report the expenditure of those funds on their CIFA, which, then the audit the audit of that subaward for the subrecipient is then really auditing more of the detail of that subaward activity. So the payroll costs, the non-payroll, the procurement. And so again, at the pass-through entity level, the single audit is really focused on your monitoring of the subrecipients. They don't get into the detail of actually auditing the details of the subrecipient, just your monitoring of the subrecipient. So hopefully that that's clear. So in terms of common findings over the CEPA. So the thing to remember here is the intake of the grant is very important in identifying what is federally funded versus what is not. If there is a misstatement, so when the auditor gets your draft CEPA, so schedule of expenditures of federal awards, we do test it. We test it for completeness. So we'll select a sample of grants or contracts that are not on the CEPA, review the agreement, and determine, okay, did you properly exclude from the CEPA? And if we find some that are not excluded, we may have to issue a finding there. But it's really the missing federal pass-through subawards where we'll select those grants or contracts that are not on the CEPA, review the agreement, and actually based on, if the agreement references a federal program name, assistance listing number, references sometimes to CFR Part 200 or other federal regulations. We're looking for indications that this is federally funded, and sometimes find that the subaward was improperly excluded from the CEPA. Yep, thank you, Emery. Using the acronym there. Improper basis for determining when awards are expended. So that's just making sure that the expenditures that you're reporting on that CEPA that you give to the auditor represent cost incurred on your federal awards. A recent example I had of an error is when the client gave us the CEPA, it included not only cost incurred and reported to the federal agency, but it also included costs that had accumulated in that cost center that were above and beyond the federal award amount and that were not requested for reimbursement from the granting agency. So it included kind of both the award costs, but also other costs incurred that the entity was going to bear. Whereas the CEPA, it just wants to identify those costs that were incurred on the award that are being reported for reimbursement. Federal expenditures in error, including matching costs. And so if your grant has a matching requirement, the matching costs, so the costs that you've contributed to that project, do not get reported on the CEPA. The CEPA just wants to know, what are you charging the federal government? And so matching costs should not be included on the CEPA. And the non-cash awards missing, USDA food commodities, whenever there's a food bank, we have had instances where the finance director is like, nope, we aren't receiving any food commodities. But then you talk to the director of the food bank, they're like, oh yeah, we get those all the time. So, so that's another error that we've seen is food commodities not being reported properly. And then we have other presentation related issues in the CEPA, incorrect and missing assistance listing numbers, names of the pass-through entities emitted, missing the pass-through contract number. Sometimes the auditee will draft kind of their listing of federally funded awards with the expenditures, and then the auditor actually drafts the CEPA. But ultimately, you as the auditee has to take responsibility for that. So making sure that if the auditor is drafting the CEPA, documenting the assistance listing numbers, pass-through entities named, that you review that in detail, just like you would the financial statements. The auditor may prepare the financial statements, but you ultimately have, it's your responsibility to make sure that it's correct.
And answering Janine's question, so it would be your responsibility as the grantee to find, choose, and vet an auditor to perform the single audit. The question was, do you hire a company or does the grantor issue an auditor? And for single audits, it would be your responsibility to find and vet an auditor.
Yep. And the subrecipient's responsibility, right? Like, and one of the things we're going to cover in part 2 is, one of the key elements as a pass-through entity is actually obtaining and reviewing the single audit that was that the subrecipient had performed. One of the last kind of tidbits, random facts here, is the Congress has directed the Government Accountability Office to to have federal agencies identify recipients who were required to have a single audit performed but haven't had one performed yet. And so that came out just in the last 6 months or so. And so it'll be interesting to see how federal agencies kind of determine that. But really focus on making sure that if you're required to have a single audit performed, that you're having one done. Okay, so we have preparing for your single audit. Maybe I'll mention a couple of things, and then Jen, if you want to add in here. The first bullet point is really the most key thing. And the fact that you're here today, and probably in other sessions, listening to training, really investing the time to understand the requirements, and making sure your policies and procedures comply is really the best thing that you can do preparing for the single audit. Sometimes when you go through the audit, kind of the positive, approach is okay. It's going to be a learning experience, but the learning on the single audit can be rough when you're getting findings. Sometimes I have question cost and could result in repayment. But it's really making sure that you have that expertise to manage that federal award, including if you're passing funds through to subrecipients, that you understand your responsibility to monitor their activity. Ensuring the books are closed for the fiscal year. So oftentimes when we do the single audit, we're also doing the financial statement audit where, you think about if you have adjustments, let's say in a financial statement audit where you received a management letter that went to the board that identified a significant deficiency or material weakness. Well, in a single audit, that gets reported, that same kind of scenario gets reported in the yellow book report as a finding. And so it kind of elevates that issue. So making sure that from a GAAP standpoint, from an accounting standpoint, that your books and records are reported in compliance in accordance with GAAP. Making sure you're devoting the time. So when the auditors will provide or post a listing of things that they need to plan the single audit, make their sample selections, making sure there's an understanding in terms of when they are going to do their testing, and so that you gather the documentation, the sample documentation they're requesting. What I would recommend is, so let's say they ask for payroll transactions, non-payroll transactions, procurement documentation, making sure you're going through that, you're reviewing the documentation before you post it, just so that if there are anomalies or maybe a lack of documentation, let's say on the procurement side, that you can start already to backfill that. Sometimes what happens in an audit is we get documentation thrown at us, and then, okay, we start to make preliminary conclusions or conclusions on what we have. And then you find out there's actually more to it. There's more documentation that exists. And so, really making sure that you aren't relying on the patience of the auditor, because some auditors will work with you to go to the end to try to get the documentation. Others will just simply conclude on what's in front of them. So making sure that you really go through a thorough review of what's being prepared or requested. Policies, procedures throughout the year, making sure that the auditors have the most recent policy and procedure. And then last but not least, prepare the schedule of expenditures of federal awards and making sure that's accurate. Anything to add, Jen?
Sorry, no, I think that covers. I think that works good. I just think just highlighting that I think a lot of times it's that first round with the preparation of the schedule of expenditures of federal awards that really leads people to need additional assistance and training. So keep that in mind when you're thinking about your timing of your single audit, making sure you can fit that in.
Yeah, and really making sure that when you give that draft of the CFA to the auditor, if you haven't done a detailed review of your grants and contracts to determine if they should be included or not, consider actually doing that before you provide the draft. Sometimes providing the draft CFA to the to the auditor is something that is done quickly and sometimes is even done without review. And so just making sure there's a review process, just like you would if the auditors were asking for, reconciliations of the cash account or the fixed assets, you would, okay, is this reconciled? What is the support that we have to support the amount that's being reported on the trial balance? And so just remembering the CFA, the auditor really tests that because that determines the scope of the single audit. And so, and again, we'll report a finding, may report a finding if there are errors that are identified. So.
All right, we'll give Troy a break here now, and we'll talk about grants management and go into what the grant process looks like to give you a little bit of a high level before we dive back into the provisions and the cost principles. So the internal grant process for you, there's the pre-award section where you're finding the funding, you're preparing the proposal, you're routing and submitting the proposal, your policies and procedures around that and what that looks like, who's reviewing to ensure that what you're committing the organization to is legitimate and reasonable. That's all part of that pre-award process. And then we have the award phase, which I feel like is a bit of a misnomer, but this award phase is when the federal government is awarding you the grant. And so during this award phase, what are the things that we should have on our mind? Well, we should be reviewing the agreement to make sure that it's what we said we would do during the pre-award, that the budget still looks reasonable. We'll get into a little bit more of this as we go along. And then we have the post-award phase, which is when we're actually implementing all the work that we said we would do. We're carrying out the purpose of the grant. We're meeting our objectives. We're performing and carrying out our programming. And so that includes everything from the award setup in your systems through managing and monitoring the projects underneath the grant, and a closeout phase. So there are three main phases, but you can see here that there are a lot of different activities that happen under each phase. And so going back to this award phase and this award negotiation and acceptance, I think a lot of organizations find themselves getting into trouble when they have submitted a proposal. Maybe it's been months since they submitted it. They don't remember exactly what they promised they would do, but they're so excited to get the grant. They sign on the dotted line and the money comes in. And maybe the person who signs isn't the person that has signing authority for the organization. Maybe it's not someone that that is going to communicate the fact that the grant was won with the appropriate people. So we really want to make sure that when we start setting up a grant process and receiving grants, that our policies and procedures cover the entire life cycle of the grant and not just this post-award phase when we're doing our implementation and we're spending the dollars, but pull that out and push it all the way to the beginning. Who's reviewing these proposals? Who's submitting the proposals? What's a good time frame? Legitimately have people review who's included in the development of the process of the proposal. Do we need to bring IT in? Is HR important? How are we going to scale up? Does this meet the objectives and the goals of the organization this year? So thinking of all of that in the pre-award, and then we have the award phase and we get the grant, and what are we going to look at? Well, make sure we understand the period of performance versus the budget period. Sometimes they're the same, sometimes they deviate, but we need to know what the period of performance is, because when the auditors come in, they're going to be checking on, do our expenditures fall within this period of performance? So it's very important to get that noted. What's the award amount? Is it the same that we applied for? Did it change in any way? Sometimes you get more, sometimes you get less, but do we understand how much we're being awarded and when we're going to get the money, and how we're going to draw it down? All of that important information. Do we have an approved budget and narrative? Do those things still hold true? Do we need to hire positions now for any kind of personnel that were put into the grant that maybe we've had turnover for, or maybe we were waiting to see a board, taking that into consideration. Is it cost sharing or matching requirements under the grant? And we'll go into what that means more in later on. But do we have to put money or effort into this grant in order to receive additional dollars from the US government? And what does that look like? How are we going to track that in our systems? What is our indirect cost rate? We talked a lot about how we talked some about how the indirect cost is now increased from 10 to 15%. But Troy mentioned, did we get this? Is this now a subaward that we're receiving? And so we need to know, did the main award come before October 2024 or after? So what are our indirect cost rate? What's allowable for that? And then do we have a negotiated indirect cost rate with the federal government? And has that been correctly attributed to this grant and outlined in the grant agreement? Checking the general terms and conditions. These apply to everyone across the board that receives money from this federal agency. It always includes, if it's a federal grant, to CFR Part 200, again, the uniform guidance. But what other additional federal agency guidelines are included in this grant that we need to know and be aware of to be in compliance? Are our internal controls in place to make sure that we can uphold all those requirements? And then usually there's some specific conditions that may apply to you as an entity specifically. So sometimes if it's an award that deals with research and development, there'll be a key scientist that has been named in the proposal, and you're getting this grant because of their reputation and their skill set. And if they leave, you're required to tell the federal government that they've left, what your plans are for replacing them, and how long that's going to take, because they need to know, is this going to be a viable project going forward with this individual no longer with your organization? Some other key provisions or key conditions, specific conditions that might exist are the different reporting requirements that are required. If you've had a desk review and maybe there were some findings, they may put additional specific conditions around your reporting or details that they want to see from your entity. So making sure that you know what those specific conditions are and you can be in compliance with them, that's part of this review process. Reporting deadlines, not only is this something that single auditors check, but your grantors will also check are you reporting to your deadline? And that is important to keep in mind. How are you going to draw down your funds? We talked about that before. And then where are you doing this reporting and payment request? Are you submitting it to a portal? Are you emailing these to your grant administrator? These are the types of things you need to know in order to draw down those funds and meet your reporting requirements. And I always say it's important to meet the reporting deadlines, even if you have to go and revise later, than to miss them altogether. So please keep that in mind. Those reporting dates are very important. All right, so now we're in the post-award phase. We understand our grant. We've signed on the dotted line. We're going to get this award. And what do we do now? So now we need to communicate and document with staff across the board, with finance to be involved, needs to know, and there needs to be open communication and documentation. I always say, if you document, you can have done everything perfectly, but if you did not document, it didn't happen. So make sure that that documentation is set up. Make sure that everyone understands what needs to be documented and where they're going to put that documentation. The federal government says you can still use paper, but you don't have to. You can use digital records, which I highly recommend, and then storing them centrally in a central location so that you can so that anyone who needs to can go in and pull those for the federal agency, for your own needs, or for audit purposes. Assign an internal point person to administrate the award. We want to make sure that one person knows, is responsible, and is the lead, so that nothing else comes there aren't two people who think that they're in charge and neither person is doing it. So we want to make sure that one person is identified as the lead so that they can track and make sure that all the reporting requirements are met. We're going to need to get to know our grant administrator. There, you may have a need to communicate with them about prior approvals that you might request under the grant, or clarification on some gray areas when it comes to the requirements of the award. So we just want to make sure that we have a good relationship going with the grant administrator so that we can keep them apprised of our progress, submit our reports if that's who they need to go to, and just can keep them up to date, and ask questions. And then any key communications that happen with that grant administrator, we're also going to want to document that and keep that in the files. If they said you could do X, and the auditor said, well, did you get approval? We need to be able to pull that email out and reference it to show that, yes, in fact, we did get approval. All the things that I listed on that award phase would also be something to maybe keep in a one-page cheat sheet for the award, so that you can enter that key award information into this grant management tool and track the key requirements of the award. This is really helpful, this type of cheat sheet, if you have turnover, so a person can come in and instead of reading a 120-page grant agreement, they can just go in and reference the cheat sheet to get that key information right on a one-pager. So that's something that I highly recommend, implementing this cheat sheet, but also creating a grant tracker where you have all that key information outlined, with all your awards outlined, even in Excel, if that's what you're working with, to get that outlined and help everyone reference these awards, their key requirements. And then what you're required to do, per the uniform guidance, is assign your grant a unique identifier in your financial software. You need to be able to track, this is one of those musts, track expenses and cash management for each award individually. So if you have multiple awards, you need to have multiple unique identifiers so that in your financial system, you can track your activity under that award. A good best practice would be to have a policy and procedure for individuals to follow, to outline what signifies the creation of a unique identifier and how you will implement that and close it down when the time is right. Because again, we don't want grant codes to remain open in our finance system, charges to continue to accumulate there after the grant period, even if we don't draw them down from the grantor by mistake, but instead accidentally we include those on our SEPA, the Schedule of Expenditure of Federal Awards. We don't want that to happen because that could lead to potential findings. All right, and so going back to the uniform guidance and what required when it comes to financial management system, what do we need to ask from our financial management system? What grant management software do you suggest is one of these questions. This is a great question, and I think that this is a hard one. I know that Salesforce has a module for grantees. I think they're really great at helping you monitor grants that you may give out. And for a while, building this separate module for grants that you might receive was like an extra step that you had to do and kind of personalize. But now they have a module, and I understand that it is very good. And I've seen a demo of it and it looks like it covers all the bases. So that's one that I might recommend. And then I believe it's Karma Suite. They're kind of new in the grant management software realm. And because they're new, they don't have all the bells and whistles that they want to have, but they know what those are and are striving for it. So I think that they're going to be a real good option in the future, where they're going to have subrecipient monitoring built in, where they have like indirect cost rate information built in. So I think they're a player and they have a good base product right now. So I keep my eye out on them. But it is hard. It's not something that I think that anyone has gotten 100% right yet. So I'm looking forward to seeing what comes out of Karma Suite, what Salesforce can do with their module, because I think people are recognizing it, that it's a want. And so we just need to get someone to put it into development. But as for your financial management system, oh, Karma Suite, as in a hotel suite, is, and I'll try and find it for the second session so we can put a link in the chat for everyone. As for the financial management system, what the uniform guidance requires, again, is that you're able to track each of your federal awards that come in. So if you're using something like Sage Intacct or MIP, you may have a revenue source code that you set up for your GL. If you are working with QuickBooks Online, you may be using a project code. So whatever the case may be and whatever your financial system calls it, it's important that you have one of those for each federal award that you receive. You have to be able to prepare required reports. So a statement of activities, budget to actual is a required report as well. So making sure you can perform that and get that budget to actual comparison so that you can evaluate spending. You have to have the ability to prepare the schedule of expenditures of federal awards, the CFA, from the information that comes out of the financial system. You do not have to have your system in accrual accounting. You can report on a cash basis as you go through your grant. However, at the end of the year, at the end of the grant, you do have to make sure that everything is entered on accrual basis. So that is an important note there. You're not required to do cash as you go along, but at some point you are going to have to switch over to accrual to make sure you have all the expenditures in the period for closeout for end of the fiscal year. And you're required to have written procedures around your financial system. So again, how are we going to initiate these revenue source requests or project code requests in the finance system? How are we going to close them down? What is going to initiate payment requests? And we'll get into that in a couple of slides because that's a big one that's tested for the single audit and has its own section. And then how are you going to determine allowability of costs in accordance with Subpart E? So a lot of organizations have an allowable cost policy, which dictates that we're going to train our staff on Subpart E. We're going to have that key point person reviewing the budget to actuals. We're going to have staff looking at timesheets to make sure that time is allocated correctly and approving that the people who said they worked on an award actually worked on an award. So these are the types of things that we want to make sure that are happening to ensure that only allowable costs are hitting our grants. And so when we talk about the single audit common findings around the financial and program management side of the house, what do we see? Well, from the single audit side, we have a lack of understanding of the uniform guidance and the federal program specific regulations. So again, if you're not familiar with the uniform guidance, you may not be familiar with the fact that you have this period of performance and that you can't have costs without prior approval that start before the period of performance. We'll talk about that payment piece a little later, but if you're drawing down, if you got $1 million in advance and you draw it all down in advance, well, we'll talk about how that's not actually how that works, and how you need to have a process in place for advancing yourself only the amount you need for your immediate cash needs. So really understanding the uniform guidance is one of those key areas that we see trip people up. Lack of effective grant intake process and related compliance organization efforts. So again, did we not set up, excuse me, did we not set up a revenue source code for this grant, and we ended up putting the costs in another revenue source code. And then halfway through, we realized we needed to move those expenses, but we had an issue and not all the expenses moved, and now we have unallowable costs in this other revenue source code. We've seen it all, and that's one thing that we've seen. Additionally, leaving those revenue source codes open past the period of performance and continuing to incur costs to that revenue source that causes issues as well. Lack of adequate policies and procedures covering compliance requirements, and then inadequate internal controls or oversight over financial compliance and activities. All of these are these single audit common findings that may occur without the proper training and background on the uniform guidance and the single audit. Now we're going to get into subchapter D, which are the post-federal award requirements. Subchapter D includes what we just talked about, that financial management system, but it also includes property standards, procurement standards, and subrecipient monitoring. And subrecipient monitoring we're going to get into in the next session because it's kind of a big topic to get into. So we'll proceed as we go now, talking about payments. So payments at a glance. We're gonna do a little back and forth here between Troy and I. So I'm gonna give you the regulations and he's gonna give you the audit perspective. So we're gonna ping back and forth here. So we have the UG at a glance. So the payment requirements are you can have ID. They want everyone to be on advance payments. For most direct awards. Subawards may be a little different, although one of the changes that happened with the uniform guidance is that ideally subawardees will also be on advance of payment when appropriate. So if you have the correct policies and procedures to minimize the time between when you draw down and expend the funds, then you will be put on advance payment. That's part of the risk assessment that the federal agency will do before it gives you funds. So just like you do a risk assessment for your subaward, the federal agency will also do a risk assessment on you. And if you're deemed low, maybe even medium risk, you will be put on advance payment. So advance payment. The idea is to minimize the time lapse between when you draw down federal funds and the disbursement of those funds. And what should you consider as an acceptable time? So the idea is that it's going to meet your actual immediate cash requirements. So if you know you have payroll coming up at the end of the week, and historically payroll is going to be $200,000, and you have that backup documentation that indicates that you can reference should you need to, then you're going to $1,000 in advance, because within 3 to 5 days, you're going to spend that money and you know it's administratively feasible to dock, and that meets your immediate cash needs. So that's how you would determine that and ensure that you have you're minimizing that time lapse. Then we get to the reimbursement method, which is different from advance payment. And this is mostly where you'll see subawardees or maybe some direct recipients, depending on the funding. And that is that you've already incurred the cost before requesting reimbursement. And the U.S. government and pass-through entity, they have to pay you your reimbursement request within 30 days of receipt. So if you have subawardees, you incur that expense once you pay the subawardee, because you need to review to make sure they're in compliance. That's part of this payment process. But you have to do all of that within 30 days. That's what the uniform guidance says. So keeping that in mind, you have a time obligation, just like the U.S. government has a time obligation to you.
All right. So in terms of findings, the common findings. So when we're testing cash management, as it's called in the single audit, what we do for testing, if you're receive your monies through drawdowns, advances, is different from if you're on a reimbursement method. So for the advance payment method, probably the most common finding that we see, our organizations are not minimizing that time lapse between when they draw the funds down and when they disperse the funds. So an example of that would be they draw down today, funds needed to cover the next quarters of expenses. And so that's where it's really important to look at the term and condition of the award to make sure that you understand how is that funding agency identifying the time lapse between when you draw the funds down and when you disperse the funds, because it can really be different based on the payment platform that's used. One of the things that when we're testing advanced drawdowns is, so if you went on to the payment management system, for example, or the ASAP, and you drew $50,000 down, the auditors will want to know, okay, what expenses did you draw those funds down for? Because they need to test to make sure that, those funds were dispersed or incurred within that, meaning that time lapse. And then the last but not least, the lack of review and approval of drawdown requests. And that's really making sure that, before that drawdown occurs, that someone in the organization that's responsible for compliance has reviewed to make sure that, okay, this is the drawdown. These are the funds that that drawdown is supposed to be used for, to make sure that you are minimizing that time lapse. And on the reimbursement method side, so that's where you're submitting for reimbursement of cost. And so what the funder is saying, okay, you need to incur the cost before you invoice us for those costs. And so what the audit will do, again, okay, you build this $50,000 for the month. What were the costs? Provide us a detail of the costs that were included in that invoice, and we're going to test to make sure those costs were incurred before you submitted that request for reimbursement. And so again, when we're testing cash management, we're testing both on advance as well as the reimbursement method, and making sure that you really understand when the costs are required to be incurred and dispersed for you to request that payment.
Perfect. Okay, so I think we might have to carry over some of this to the next session, but I think we might have time. No, we have 1 minute left. So we have some additional slides that we'll go through the next time related to cost sharing and matching. So we will just move that to the second session. And then as it goes, I will pass this over to Emery to do some final housekeeping for this session. I do want to point out that when you get the slide deck, there will be some resources here that you can use. We have a reference to the uniform guidance. We also have a reference to the uniform guidance frequently asked questions. And so if you think it's a gray area, chances are that someone else has also found the guidance to be a little gray. And so another resource that you can use is to reference these frequently asked questions to get a little bit more clarity on how the US government wants you to treat a specific requirement within the uniform guidance. Additionally, we have the 2024 OMB compliance supplement. Troy referenced this earlier on, but this is the auditor's guide to how they're going to audit a particular program. And so you can use this information to see what the auditors are going to look at in your specific program, because this outlines those requirements and what they're required to review when looking at your program. And then, as mentioned in the chat, there's the subrecipient versus contractor checklist that you can use for your subawards. It'll walk you through specific questions that help you make the determination between subrecipient and contractor. So with that, I will pass it over to Emery, and I look forward to seeing you all on the 27th.
Great. Thanks so much, Jen and Troy. That was a lot to get through. You did a fabulous job. Thank you again. Yeah, Emma and I have links in the chat box. If folks haven't signed up for our next session, it should be very worthwhile. And then we also have that dedicated question and answer session, knowing that this is just a lot of content and we really want to provide folks a dedicated time to really work through it with Jen and Troy, ask all your questions, and we will be sure to carry over questions that have remained unanswered from these two webinars into those sessions. So yeah, if you can make it, great. We'll also send out a recording of that Q&A session. Thank you so much for coming. We will have a survey pop up when you close your Zoom window, and we would love for you to take that so that we can get more feedback to inform our subsequent sessions. Hope to see everyone next week. And thanks so much, Jen and Troy.